Hello everybody and welcome to another video, and today we're talking about Newmont Mining, or NEM ticker symbol. As you'll see, they're paying a 4.81% dividend yield currently. Let's start off here by looking at the most recent dividends. And as you'll see, going back to even like 2015, you'll see they paid 2 cents per share, and then they paid 7 cents, 14 cents, and now they're going all the way up to 25 cents. 55 cents, 40 cents. So the most recent cash dividends were 55 cents per share. So they've been raising this dividend consistently, which is a good sign of a strong company. It's not always, right? It's not the only thing you look at, but it's one indication that if they've raised this dividend consistently in the past, that going forward, there might be some cuts, sure, but will they be able to bounce back after that? What I'm saying is it's a good sign to see that they've been raising their dividend. And of course, that means more cash flow to you, the investor. So when you're looking at a stock that has a starting yield of 4.81% and is paying 55 cents per quarter, that's over $2 per share just for owning each share of Newmont. So if you own 100 shares, that's $200 per year, or over $200 with the current dividend. If you own 1,000 shares, that's $2,000 every single year in your pocket. And if you own 10,000 shares, you're looking at like $20,000 roughly in your pocket just from the annual dividend, as you'll see, $2.20 per share. Now, as you'll also notice on the chart, they did post some disappointing numbers in the second quarter in terms of their profit. And I'm going to get into that here in just a minute, but I want to go over the chart because you'll see a steep sell-off, especially going in here with earnings. You'll see a gap down. This is way overdone in my personal opinion. When you're looking at a stock like Newmont Mining, they arguably have some of the best gold and silver assets in the world. They are one of the largest, the top dogs. They have huge cash flows, huge revenues. They did beat on their revenues in the last quarter, and we'll get into that, like I said, in just 1 minute. But when you're looking at a stock that's basically come down 50% from the peaks, one thing that I look at when it comes to dividend stocks is the fact that you're going to be able to get a much greater starting yield with a stock like Newmont Mining. And so the reason I say that is because the stock, at $85 per share was roughly the current dividend is 4.8%. You're probably looking at a 2.4, 2.6% yield versus how much more yield you're getting now. The dividend has not changed. Like I said, you always have to consider everything with the business. You can't just look at the dividend. But when you're looking at, for example, the cash amount of 55 cents per share here, and that dividend amount that is consistently being raised over the long run, I think Newmont Mining is doing a great job at the cash flows, the business. And let's get into that. When Newmont Mining stock drops on Q2 profit miss, you probably hear my cat meowing in the background. She wants outside. But sorry for the background noise. Newmont Mining stock is slipping with the release of its Q2 earnings report. The company missed Wall Street's earnings per share estimate. It also updated its outlook for the full year of 2022. So, when it comes to analysts, right, the first thing is this first paragraph. The first bit of bad news is the company's adjusted earnings per share is 46 cents. That's well below the 61 cents per share that Wall Street was expecting for the quarter. Also, it's a major drop from the 83 cents per share reported during the same time last year. When it comes to revenue, Newmont reported $3.06 billion for the second quarter of the year. That just barely beats out the $3.04 billion that analysts were looking for during that period. It's also a slight decrease from the $3.07 billion reported in the same period of the year prior. According to Newmont, its earnings for the second quarter of 2022 were negatively affected by higher costs applicable to sales, or CAS. It attributes this to inflation as well as the Penasquito profit-sharing agreement it entered into in the second quarter of the year. And then, you have a warning here from Newmont. Outlook warning, it says, from Newmont. Newmont's updated 2022 outlook includes 6.0 million ounces of attributable gold production and 1.3 million gold equivalent ounces from copper, silver, lead, and zinc. The revised outlook for attributable gold production includes negative impacts from operational challenges at Ahafo, a transition to a leach-only operation at CC&V, as well as challenges from a competitive labor market, primarily in Canada and Australia. So, the stock is down 50%. They obviously have some challenges, but nonetheless, is it warranted? Is it warranted if you're looking at this from a 5-year perspective? Newmont Mining. If you're looking at this stock and you're seeing that the stock has fallen 50% pretty much from the peak, is this warranted? Ask yourself. I think as traders and investors, we get so caught up on the short term. We're trying to focus, and these analysts on Wall Street are the worst at it, in my personal opinion, because they're always trying to pinpoint where these numbers are expected to be, and they're running all kinds of calculations. But analysts are wrong a lot. Just like companies don't come in with analyst expectations. It's basically just a guessing game. And the truth is, although there are some challenges with a company like Newmont, I mean, what company doesn't have challenges, right? So you have to ask yourself, if you're looking from this, from a 5-year perspective, the company is still, doing fantastic things. They're moving gold and silver like crazy. They're one of the largest mining companies in the world. In my opinion, they arguably have some of the best mining assets in the world based upon how much gold they mine, how much silver they mine, huge cash flows, solid balance sheet. They're killing it in terms of increasing the dividend over the last several years. If gold, and that's the other thing I want to keep in mind here, gold right now has been $1,700, $1,800 an ounce. Ask yourself what would happen if gold went to $5,000 per ounce. Do you think a stock like Newmont Mining would be trading at $46 per share? No, right? I mean, when we look at stocks, obviously in the oil space that have done extremely well, ExxonMobil would have been a fantastic buy. Each stock has its day in the sun. And what you have to try to do, in my personal opinion, is pinpoint these opportunities when they come to you. This is a golden opportunity, in my personal opinion. $46 per share. Obviously, if you're looking at this from a 6-month perspective, even a year perspective, it might be too soon. But then again, we could see a quick rebound to 65 or 70. And keeping in mind that the entire time you own the stock, you're going to be getting the dividend, assuming they continue to pay out that dividend, which in my personal opinion, it's looking like they probably will. Just based upon the fundamentals of the business, I believe they will continue to pay out at least, as much as they can. Could you see a dividend drop in the future? Obviously, right? There's always that risk. But look at it from a 5-year perspective. Where do you see the price of gold going? And then ask yourself, will Newmont Mining benefit from that if gold goes eventually to $5,000 an ounce? I believe they will. And so you have to ask yourself, at a steep discount like right now, you're getting a good starting dividend yield, solid company, one of the largest mining companies in the gold and silver mining space. You can even look at some of their numbers down here and go into that. This is finviz.com, by the way, if you want to check this out. I will leave a link to this down below if you want to, put in some companies yourself, and you can look at all the different numbers they have here. They have huge cash per share, dividend per share. You'll see everything there, EPS, expected EPS, and all that kind of stuff. So very helpful. But like I said, this is obviously not financial advice, just one of those things to keep in mind when you're looking at a stock like Newmont. I think this right here could present a great opportunity for people who are looking to get into not only the gold mining space and diversify their portfolio, have some protection, in my opinion, from volatile exchange rate fluctuations like with the US dollar. That would be the main concern, in my personal opinion, to have a hedge against that. Because if there is a wild exchange rate fluctuation in the future at some point with the US dollar versus other currencies, then you could have something that would negatively impact inflation even more. Even though we've had a lot of inflation already, that is something to keep in mind going forward, that when the dollar tanks, we have a lot of imports and stuff, and so the exchange rate can really mess that up. But Newmont has a lot of assets overseas, and so potentially Newmont could benefit tremendously from this. And I'm just going to leave it at that. If the dollar were to tank against other currencies, stocks like Newmont, stocks like BTG, I mentioned that one in my other video, these stocks would go ballistic, and gold would as well, because gold would be viewed once again as a safe haven if that were to happen. And I know, there's a lot of speculation on that. There's a lot of talk about that going forward. So my point is, look at it from a perspective of buy low and sell high. Obviously, these stocks are beaten down. And, this stock also pays a very good dividend. Once again, I mentioned this in another video. But I'll leave it at that, guys. Hope you enjoyed the video. If you have any questions or anything, leave them in the comments down below. And until next time, I will see you guys in the, I messed up the ending. Okay, whatever. You guys have a great rest of your day, great weekend. And, I'll see you in the next one. Take care.